Welcome to Rice TVX. On today's live Rice Report, I am joined by the master of technical analysis, 20-plus year veteran trader, Gareth Soloway. I will have information down below for the playlist that I created with his previous appearances, and also links for verified investing crypto and in the money stocks. Before we begin, a few quick messages from the sponsors of Rice TVX.
Start trading crypto today. Sign up for our step-by-step video series to get set up with the best trading tools, start analyzing charts, enter and exit a trade properly, and most importantly, see if crypto trading is right for you. Join us at bitlabacademy.com.
And you can find information in every video description for BitLab Academy, Monarch Wallet, and Presearch. Be sure to smash that like button. Giving everybody time to get situated in today's live stream. Make sure you are subscribed if you are not subscribed already. And if you want to support the channel, here's a way that you can do so. Me and Gareth, we always talk about gold and silver, how important precious metals are. Get your free half ounce of silver with my partnership with Money Metals Exchange. Get your free half ounce of silver. Take full advantage of my partnership with Money Metals Exchange in 5 easy steps. 1. Visit moneymetals.com. 2. Be a first-time buyer. 3. Purchase a minimum of $100. 4. Use the promo code RICE. 5. Get a free half ounce of silver, and it's an additional way to support the channel. All right, ladies and gentlemen, without further ado, today I am joined. Somebody wants to call you master trader. I just feel like saying master trader and master of technical analysis is like too much master. So I like veteran trader and master of technical analysis, the man himself, Mr. G, Mr. Gareth Soloway. How's it going, my friend?
Good. How you doing?
It's doing well, man. It's good seeing you.
Good seeing you too.
And I always appreciate you taking time to do this. I know that you have so much going on. I mean, right now, when we get back from Labor Day is when the market actually usually really starts picking up. And during the summer, I think you were kind of spoiled because you were focusing mainly on crypto. Yeah. And now you've got everything hitting you because not only do you do verified investing crypto, which is crypto focused, but you also do in the money stocks as well, which is dealing with like your traditional legacy system, stock market, all that good stuff. And you got other stuff going on. So, man, thank you again so much for taking the time. I want to have the kind of usual conversation that we have, but I do want to take an opportunity real quick before we begin for you to share what it is that you do over at Verified Investing Crypto and in the money stocks. And I do want to let people know that I am a part of, not a part of, but I do receive, I'm a member of Verified Investing Crypto. And I love the updates from a crypto perspective. I cannot stress how great of a resource this is. And if I had any semblance to want to actually invest in the traditional stock market, I would definitely be utilizing inthemoneystocks.com, but that's a big but. So go ahead, my friend.
Yeah, well, thank you so much for the kind words. And yeah, basically it's a matter of looking at investing, whether it's in any asset, crypto, stocks, commodities. I focus on the no hype, just kind of no emotion way of looking at things by looking at the charts, kind of analyzing the rest of the investing public for their over emotional, irrational exuberance or crazy fear. And it's kind of a way of stripping it down to its basics and then getting a pure read on the probabilities of the next move coming. So it's kind of cool stuff. It's all charting, lots of cool trend lines and topping tails and head and shoulders and all of that kind of stuff. And then, I put out trade signals and do daily videos there. So it's pretty cool.
No, it's good stuff, man. I definitely encourage people to check it out. And I will have links down below for people that they want to check that out, and including for your Twitter account if they want to follow you on Twitter, which I do always recommend to keep up with you real time. All right, man. So, I pretty much want to do the standard that we normally do when it comes to looking at chart information. But I guess before we kind of dive into it, what I really want to get your opinion on, and I was texting you, I know you're busy. Do you know what the current interest rate is after all the rate hikes that we've had?
So the Fed funds rate, I believe, is 3.15%, but the 10-year yield has now hit, and I'll bring it up here on my chart just to take a look. We're right now at 3.685, so almost 3.7% on the 10-year. So remarkable there. And one of the crazier things that a lot of investors may not be aware is that the 2-year. So remember, the idea behind bonds is that you're locking your money up for X amount of years. It could be 2-year bond, a 10-year bond, a 5-year, a 30-year. And the longer you lock up your money, you should be getting a higher interest rate. That's the normal market, right? Well, guess what? If you lock up your money for 2 years, you're getting way more than if you lock it up for 10 years. And so that's what they talk about when they say it's the inversion of the yield curve. It's not kind of working the way it should.
And speaking of that, I think I forgot who I was listening to this morning, but talking about the 3 and 20, maybe it was something that has not. It may be 3 and 10. It wasn't 2 and 10, and it was second or third time ever in the inverted yield curve scenarios that this has taken place.
Wow. Yeah, I mean it's an ominous signal. Historically, it's told us that there is a recession coming, and the more the Fed hikes rates, the more I believe that we're nearer and nearer to not just a recession, but something far worse. And I think that's the scarier thing to me. And I think it's important to recognize too is that if this was 10 years ago or 5 years ago or even 2 years ago when inflation was at like 1%, 2%. It's like, okay, well, if we go into a recession, no big deal because the Fed will come out and print money and we'll get out of the recession in a year and be off again on a good economy. But when you have inflation where it is, it's really going to hand tie the Fed. It's going to handcuff the Fed, and then they won't be able to get us out. And my biggest fear is we get in this longer term recession that literally lasts for like 5 or 10 years. And it's just going to make everyone miserable. I mean, jobs and everything is just going to be kind of in a bad state of affairs.
Yeah, and I mean it seems, I don't know if it's just trying to show face or what's going on with Jerome Powell and the Fed, but they're acting as if they have a lot more room, and I don't really feel as that's the case. Now, what's interesting just to highlight with you is the last time I talked to you, I brought up Nick Carter talking with Anthony Pompliano and saying that if we were to raise 5% with the interest rates, it would default, the government would default on its debt. And you're saying we're around the 3.75 mark. That's where I was having a hard time because it looked like it was either, and it gives like a 2 figures. It was either 3 to 3.25, or I didn't know that. Then with the 75 basis, that I thought that would have brought it up to 3.75 to 4%.
Yeah. So what I'm aware of is that the Fed funds rate is different than like the 10-year yield. And so the Fed funds rate I thought was at 3.15 now. I could be wrong, but I thought that's where we were.
Okay.
And then the 10-year yield, usually the bond market usually leads the Fed, right? So the bond market itself for the 10-year is already factoring in the expectations that the Fed will raise X amount, and therefore it's trading at like 3.7%. That's what I understand it to be.
So you're saying the Fed's rate is 3.15. So
3.25, I think it is.
3.25.
Like
and they're trying to get it, from what they were saying, to like 4.5, 4.75%, which is interesting that they said that figure because that's right under what Nick Carter was saying. Now, I'm not saying that what Nick Carter said is 100% factual, because I haven't looked into all the specifics, but it's interesting. Just with that note, and I know people want us to get to the charts. We don't have an interest rate hike going to be taking place in October. No FOMC meeting. So we have the beginning of November 2nd and 3rd, which is right before midterms on the 8th of November. So the 2nd and 3rd November, we'll get the announcement on the 3rd. Then the next one, the last one of the year, would be December 14th and 15th. We'll get the announcement on the 15th. What do you think is going to happen on those two just with your and this is speculation because we're in a really uncertain area, but do you think that the Fed will remain hawkish on both meetings? Do you feel that they'll have to ease up possibly in November and or December?
Yeah, I mean, I'd be in the camp that so number one is when the Fed raises interest rates, there's a lag effect before it hits the economy, right? So that's the concern that I have, is that they've now 3 meetings in a row done 75 basis points, and I'm not sure that the economy has yet felt the full effect of those. Certainly not of the last one. And so it makes me wonder if all of a sudden we're going to see economic data drop off a cliff where even the unemployment rate could start to spike up dramatically. And does it mean that in 2 months, in November, maybe the Fed only does 25 basis points? I think they're still going to do something because they're guiding aggressively. They don't want to look like they're now wusses, right? So they'll probably just do some token amount. But if we're seeing that economic data, and if the CPI data comes down decently, then I think they should back off. And again, I'm all for getting inflation under control. But the question you have to ask yourself is there a way to do it where you can slowly ease it into the system and bring down inflation versus stamping on the economy and then causing even more hurt, right? So think about people that are now experiencing inflation and how much that hurts. Now take that and just throw them into like a bad recession. And it's like 2 wrongs don't make a right here. So you have to do it in a way. And that's my only concern with the Fed, is that they seem like they're very egotistical about it. Like, oh, people lost faith in us during the printing, so now we have to prove that we're strong and macho and like just crush it, right?
We have to prove that we can fix the problem that we created.
We have ultimately, we know from the Fed's history, right? And this is proven. You can go back. The Fed has like never gotten it just right in their history.
Well, what I will say without not being an expert in this area is they do look like wusses compared to what Argentina did.
Yeah.
Because if I'm not mistaken, Argentina raised their interest rates 75%.
Yeah.
Because they're having 100% inflation.
Yeah.
But then it's talking to so many people. In order for us to do this effectively, we would have to raise the interest rates above what the inflation rate is.
Yeah. Correct. I mean, that would be the ultimate to get out of jail thing. But the problem is what does it do to the economy then in the whole system? And I mean, it's a house of cards that's been built up at this point by the Fed and by the government spending. And like that, Carter said, it's you can't do it at this point.
Well, and the last thing I'll add is I'm really curious about, because we see CBDC stuff going on. The government wants to have more control, and they want people to be more dependent upon them. So, I mean, if we get into a dire situation and we have CBDCs, I mean, I could see UBI being instituted. I can see all kinds of really interesting things that give the government more power during. So it's a very historical point that we're in. So just a matter of paying attention. I want to go ahead and get your chart information pulled up. I appreciate everybody being patient, because I like to get your thoughts and stuff beyond just looking at the charts, because you got some really good insight.
Yeah, so this is the chart of the S&P 500, and you can see, I mean, even for a bear market, there's been big bounces, and always remember that bear markets have these kind of massive rallies to them. But look at how fast we came right back down to that June low, and we're now really testing that June low. And ultimately, I do think we are getting into a level where we probably get a small bounce. I could see the bounce back to maybe 380 on the SPY, but then I do think we're going to break lower. And I still have the target right down here. I mean, this is a glaring spot for where the S&P probably wants to go, which is that pre-COVID high. So just before the collapse in March of 2020, this is where the markets were trading, which was an all-time high back then before the collapse. Then obviously we know gangbuster printing money and checks to Americans. And now we're starting to suck that out. So we're only, I think, about 7% away from that. It does seem very likely by year end, we should be testing that.
Okay. Well, I mean, based off of your chart information and kind of having an idea of what the Fed wants to try to do, I mean, what are you foreseeing as far as time periods for bottoms? Because I mean, obviously, this is gonna correlate with crypto, and what I'm curious about, and is the reason I'm bringing this up, is I'm really curious if if October is going to be more bullish than November. Because November we've got the rate hike information out. They don't raise the rate hikes more than 75 basis points. It could be really good for the markets, and we could have positive action in November.
Yeah.
And a normal October type situation, which a lot of people refer to October as October.
Yeah.
So I'm not sure, I mean, I just want, I wasn't sure if you were thinking October we could see more, us hitting a bottom or going lower, or November and then upside in December. I know you can't foresee the future. I'm just trying to kind of gauge based off of your 20 plus years as a master veteran trader.
So
I'm not trying to put you in a hard spot here, man.
No, it's okay. So, I mean, I think for me, it's expecting a near-term bounce. Probably I could see us going a little bit lower to this area here, around 358, 357. So a little bit more downside on the S&P. Then I think you bounce into mid-October, maybe even into the midterm elections in early November. And then I could see us seeing some hefty selling following that into December. And then, always around Christmas, there's always a small chance you get a little bit of a relief rally. People are happier with the coming, holidays and so forth. But again, it's hard to pinpoint timing. But I certainly think, before year end, we're at least hitting the pre-COVID highs.
Okay. And the reason I asked that is because obviously with what we're going to be going over with other chart information, I mean, everything is correlating to what we're looking at now.
Yeah. Yeah, absolutely. And again, this is pretty wild stuff because, you look at what's going on in the currency markets with the DXY, and the DXY is just a rocket ship to the upside. I mean, look at today alone. Look at that green candle.
Where are we at? What is the price?
We're over 113 on the DXY, and that's again a 20-something year high on the dollar. If I go to the chart here and zoom back, you have to go back to 2002 before you were at the same level. So you're talking about a 20-year high. This is probably where it's going. 120 is looking very intriguing, and that's still a long way away for the market. So that could force a fair amount more downside. And again, the higher the dollar, the markets risk assets hate a strong dollar. They want a weak dollar or at least a stable dollar. But yeah, you throw that in the mix, then you throw again, like what we looked at on the 10-year yield and how that's been spiking. And it really, I mean, we are in unprecedented times for these type of things to be making these type of moves. Amazing chart here just on the 10-year going from 2.5% to nearing 4% in basically, this is the weekly chart, so basically 6 months or so.
Wow. It's just, I personally wasn't seeing much more upside with the DXY, but I'm not you. So
no, to be honest, it's been a surprise to me too. I did not know that the Fed would be as hawkish as they were on this past Wednesday when they announced it. I knew a 75 basis point rate hike was going to come. That was in the markets, but it was their verbiage saying, hey guys, we're going to raise even more than you think into year end that caught me off guard. And for me, again, it's common sense. I understand they want to get it under control, but you got to see how these things affect the economy, because otherwise we're going to wind up in a depression.
Not just the economy, but the rest of the world too. Yeah. And depression, I think, is already in the books. I don't think, I mean, I know you're trying to be positive with things. I try to be a realist. They've already compared since March 2020 onward to 1929 and Great Depression, and saying that the position that we're in, we would experience a depression that was greater than the Great Depression, which greater than great when you're dealing with a depression isn't good. It might sound all right because you're saying greater than great, but it's shittier than shit is really what you're saying.
Yeah. Yeah, and that's the truth of it too, is that you're in a position where, none of us, there's very few that were around in the last depression. And I've always heard this, is that every generation has to experience that. It's a way of kind of tightening the bootstraps, if you will, or the belts. And really we haven't gone through anything that bad. Even 2008, 2009 wasn't even close to a Great Depression.
That is just insane to think about. The Fed is it's just a very crazy situation. So, and then Bitcoin, it was created because of the 2008 crisis.
Right.
And since its creation, it's been up until recently, it's been in a inflationary environment where there's been money printing going on.
Right.
And you do see Bitcoin's value going up over time compared to the dollar. But this is going to put us in a really interesting point, because now Bitcoin is performing in a deflationary environment, and it's not necessarily doing what most people are expecting. It's correlating to the stock market. It's very much manipulated. Right. The legacy system has their hands in it. And so, yeah, where are we headed?
A lot of it's human emotion too, is that, when people get scared, they just want to be out of anything, and so, there are those people out there that have stocks, and then they see their stock portfolio getting crushed, and they're like, oh my goodness, I don't want to risk losing what I have in crypto as well. And so they end up unloading that as well. And it kind of creates this connection. Now, eventually you'll see that decouple, but even gold, look at gold, right? Gold is the ultimate safety thing, and it's still going down today because of the strong dollar, which is then pounding the stock market and crypto as well.
Yeah. And somebody was asking what happens in a depression. Pretty much, how would a depression would be strong dollar and high unemployment and high inflation?
Yeah, in regards to the dollar, you'd have to think that if there was a Great Depression, they would be, even if with inflation, they would still be trying to stimulate, which is kind of scary in and of itself. But just think about 20% unemployment, and food lines because people have no jobs, and therefore, you literally have. If you look up pictures of the Great Depression, it's shockingly crazy to look at some of what was going on.
Yeah.
With people just starving. It was crazy. They couldn't afford food, they couldn't afford housing, and it got real bad. So let's hope it doesn't get to that. But I think as smart investors, you always want to kind of prepare for that rainy day just in case. Hopefully it doesn't happen, but you want to be prepared.
Yeah, no, and now we are really getting into now I'm starting to scare myself here a little bit, because this is like really bad territory. But the only other difference I see with this is more on a global level this time than it is more US focused. So that kind of makes the situation a little bit different. So I'm hoping for the best.
Yeah, and I was just going to say too, is that the scary thing about being on a global macro basis is that when you get these things to happen, what does it lead to? It leads to authoritarian rulers. It leads to wars. It leads to, people fighting over resources. It just kind of, it can devolve into a very scary scenario. And again, I'm not trying to be fear mongering or anything like that. But we just have to think through the steps that occur in a global Great Depression, and it's a scary world.
And being realistic, I think, is important, because you're not getting this kind of information from your mainstream news sources.
Right.
They're trying to put a Band-Aid on everything and make everything seem like it's better than it actually is.
Yeah.
So what are your thoughts on where we are headed with Bitcoin?
Yeah, so Bitcoin is just holding on to this little bit of support area right here. It looks like this support was put into play back in June, and we've kind of tested it. We'll keep on testing it. As long as it holds, that's the one positive you have. I will say this, the strength of the dollar today and the stock market, I think the S&P is down like 2.5%, which is a huge move for the S&P. The fact that crypto is actually holding up somewhat is actually impressive. But if it does break this level, that's where you get another big wave of selling, probably down to this 13,000-ish level here, maybe 12,000. So again, it's still holding support. You got to respect that. But if it does give way and we start trading below the June lows, then look for that $12,000 to $13,000 target. Unfortunately, with my views on the macro and the economic kind of markets, I do think we are eventually going to, at minimum, 12 to 13,000.
Do you think that's going to be this year?
I do think 12 to 13,000 hits by year end. Yeah. And that would kind of coincide probably with the S&P getting down to that level we talked about earlier.
Now, an interesting thing, just to add in, if you get a chance, check out my interview with Marty Greenspan that I did last week. He's a not so observant Jew, and he was talking about the Jewish calendar and the end of the Shemitah sabbatical year, which I believe is in 3 days. Rosh Hashanah or something to that effect is the beginning of the new year. He has mentioned in previous cycles, every 7 years in this instance, that, and not every single time, there's been a lot of downward action in markets throughout the Shemitah, and then within 2 months of the ending of a Shemitah, seeing the bottom of those markets, which kind of is interesting because then you're looking at around November 26th if you want to time it to 2 months, and there's and it the past data says within 2 months we could see that bottom, which would be really interesting because that'll put us right before the last FOMC meeting of the year.
Yeah, I mean that is interesting, and I'm just, one of the things that I'm struggling with is trying to figure out where the markets will bottom, right? I mean, you can look at past crypto cycles, for instance, and say, okay, well, the average crypto bear market's 12 to 18 months, but then do we need to put an asterisk next to that because that was always when the Fed was printing money? Now they're not there to support the re-expansion of the money supply, and so does it mean it's going to be a longer cycle of bears here? And same thing with the stock market. I mean, I don't even, you have to go back to the very start of my career to really even find a point where we weren't seeing the Fed really stimulating in a massive way. So, we don't know, it's almost like uncharted territories for all the assets out there to see how they behave over the next 6 or 12 months.
In this cycle, in this bear cycle, even going into 2023, and I know it's a possibility, but do you foresee us, based off just looking at the charts, going anywhere below the 12 to 13? Do you see us going sub 10 at some point?
Yeah. So, I mean, unfortunately, the more I see what's going on with the Fed and potentially with the longer term economy, it does make me concerned we could go below 10 before all is said and done. And again, I liken it back to kind of, the .com era where you had these .coms, which were it was for the era that it was the crypto of its time, right? You had penny stocks that were a penny one day, they were 3 cents the next day, they were 20 cents, they were $1, they were $5. I mean, it was just Dogecoin, it was Shiba Inu all over again, basically back then. And what ended up happening is a lot of them went bankrupt because there was nothing below it. It was all fluff. And then you had ones that were quality names, like you had Amazon, which actually dropped 95% from its highs in the .com era to where it bottomed out. Now, Amazon ended up going up thousands and thousands of percent after that, which is what I kind of envisioned for Bitcoin. So that's the silver lining, is that we get through this, we all accumulate a little bit of Bitcoin at the lows, we can just leave it, and hopefully it makes us a lot of money over time.
Somebody's asking, where is your samurai dut?
my little ponytail, it's back here a little bit.
Sorry. What if they fired Jerome Powell? That's going to be interesting. Okay, so what are you thinking about Ethereum? Because I mean, obviously we're seeing a lot of correlation, but Ethereum seems to be performing a little bit more volatile than where we're at with the action of Bitcoin.
Yeah, so Ethereum is kind of in that same boat, right? It just hit a little bit of support. The merge is over, so kind of the excitement is over. That tends to be a sell the news event. We did come down. We did hit some support right here. It's holding. Unfortunately, if Bitcoin does break down, it's hard to imagine Ethereum not breaking down. And then you have to start looking at that $900-ish low down here. Again, it's one of those things where for me, I'm going to really be focused on the economic news for crypto. So what I mean by that is, like, if we get a CPI number that starts to fall pretty sharply, if we get jobs numbers that start to weaken, you're looking for anything that gives the Fed the excuse to not hike anymore. And if that can happen, the dollar starts to fall and crypto starts to rip to the upside, at least in the short term. So again, for me, it's really like crazy, but it's so based on economics. because that's what the Fed is following at this point. And it's weird to be rooting for like a slower economy, but we find ourselves doing that, where like that would be the positive for risk assets if we could see the economy slow down so the Fed doesn't have to hike interest rates as much.
Right. I mean, yeah. I mean, obviously, if you want a softer landing in a crash, as soft of a landing as you can. If there's a way of throwing out pillows on the ground from a plane before you have, you'll do it. But so I get it, but it's like I think I don't know. It's just really interesting to watch. It's just interesting to watch what's happening with other nations, Japan, Argentina. It's getting really crazy. I mean, because in the past it wasn't so many different factors going on. It wasn't on such a global level, pretty much everywhere.
Yeah. Yeah. I mean, it is at this point, since 2008, 2009, this is the wildest, most intense period that I've experienced in the markets for sure. And that's even going back to March of 2020 was insane, but it was short lived, right? I mean, it was just a 1 month dip, massive, but then everything shot right back up. This doesn't look like that's what we're seeing here. I mean, now we've already seen since December of last year when the highs were put in, we've seen big drops, big bounces, bigger drop, big bounce, bigger drop, and so forth. And it looks like it's kind of in the early stages, like the third inning or the fourth inning of this bear market.
Okay, I appreciate that. Are there any other cryptocurrencies that you're like really I know there's several different cryptos that you talk about with verified, but are there anything that you want to focus on momentarily?
Yeah, I mean, on Cardano's front, we can just take a look at this chart, and basically it bounced off this support line, had a nice run in the overnight, got as high as like 48 cents. But again, same thing, the stock market selling, the dollar strength is bringing it back in. But with Cardano, you just want to see it hold this line and then eventually break out above here. That would be the bull case. Again, you probably don't want to jump the ship and jump in too early because we don't know which way it's going to break. And then you could look at like something like a Polkadot here as well. And that's the same kind of thing is you're now in a situation where, let me erase that line. You've now just hit this low and you bounced, but can it continue up or is it going to break down? So I guess the bottom line is on these cryptocurrency charts is it seems to me like every crypto is at a very pivotal level, meaning it's either going to break to the upside or it's going to collapse to the downside. And even with Bitcoin, we just looked at the Bitcoin chart and it's right there on this lower line here as well. So again, I'd say within the next week or two, we're going to know which direction this is going. And a lot will have to do with what the dollar does. I mean, as weird as it's so annoying to have to constantly look at the dollar for me, but the answer is that assets are moving inversely. Like you can literally see an uptick in the DXY, the dollar, and you'll see a corresponding downtick in the stock market and in crypto.
Right, which and that's one of the things to me. It doesn't make any sense that people would be running to the dollar as a safe haven asset when we're experiencing the inflation that we're experiencing.
Yeah,
that's what's kind of mind boggling to me. I guess I also don't look at these because a lot of these things are kind of quick moves. So you might wake up one day, take all your stuff, take the majority of your holdings and put it in something dollar-based and then flip it back around. I mean, these people are moving money so fast that I'm thinking of more like swings.
Yeah. Yeah. And I think the correlation, it moves so quickly that a lot of that is computerized. It's not like mom and pops quickly buying and selling with every up and down tick. So I think we have to understand that a lot of that is institutional correlation. But I think that, yeah, I mean, one of the most ironic things, and you look back and you almost chuckle, is that in 2021, it was buy Bitcoin. It's going to keep going up because the dollar is going to be worthless. And then what ends up happening is the dollar ends up going up massively in value, and Bitcoin's what ends up crashing to the downside. And it sucks. I mean, I'm a big Bitcoin long-term fan, but it's just, it shows you how hard it is to gauge where things will go. And more importantly, the timing. Like I have no doubt that at some point in the future, the dollar will be worthless. It will have a crash. It won't be the reserve currency. But, even I can't predict like it's going to be on 2025 or 2026. Right. Like I have no clue. And we're seeing right now that it's still the strongest currency out of the basket of currencies out there. I mean, it just is.
I would love to see people start to realize and lose faith in their governments and their banks. I mean, it should have already been happening a lot more where people do go to assets like Bitcoin, and it can perform as it was designed to and not have these correlations, so that when the dollar is up, Bitcoin is down like the rest of the markets. I don't know if you how much information you have, but Eric was asking in a super chat, will Michael Saylor be liquidated by the end of the year or next? Do you think that's a possibility?
I do think, in fact, it's one of my speculations is that when you have such a prominent investor that's so bullish, is that the market tends to gravitate towards their liquidation level, right? So it's almost like he has a bullseye on his back with his Bitcoin, where bigger players are going to be like, okay, this will be like the final culmination. We get him to liquidate, and then the actual bottom is in. I don't know if he strikes me as someone who's not going to give up. Like he's ride or die, right? He's all in, and he's going to always be all in. But I guarantee you, before Bitcoin fully bottoms, it will get very crazy with him. You will see MicroStrategy under a lot of pressure and things like that.
I agree. Do you mind taking a look at gold?
Yeah, let's take a look at gold.
Gas fees was saying, if it's an interesting thing, but he was mentioning if gold pumps, China and Russia win, no way the Western intelligence and banks want that to happen, which is interesting, but I don't know if they're going to be able to prevent it. Plus, we have the Basel III stuff as well.
Yeah. So to me, gold continues to be a slight disappointment. I say slight because if you weren't trading gold in US dollars, you'd actually be doing really, really well this year. It just happens to be gold is generally traded in dollars. But if you looked at gold in terms of euros or in terms of yen, it would actually be up on the year. I think gold is down, 7% this year or something like that. So it's definitely not as bad as the S&P or as bad as Bitcoin. But in terms of dollars, it certainly hasn't been a great investment this year alone. I do think, again, it basically gold comes down to like the US dollar. I think the US dollar is really overbought. It seems like a very crowded trade in terms of long US dollar. So I do think we'll see some sort of pullback soon. But until that happens, I mean, you could see even gold heading down maybe as low as 1550.
1550.
Yeah.
Wow.
I mean, that would be worst case.
Yeah, that'd
for
be a
me,
good
right there,
buying
a big
opportunity,
support
though.
level.
Because I
my
am a
gosh,
big
yes.
proponent of both gold and silver, and I'm trying to be. I've been more of a silver stacker, but one of my strategies was hoping that we start to see that ratio start to close in a little bit better, and I can exchange some of my silver for gold.
Yeah.
And still remain with some silver, but I mean, obviously when the dollar's up, gold's going to be going down, which is, all commodities seem to be affected by the dollar, which is the reason why you had to pay attention to the dollar as much as you said it. I don't want to be looking at the dollar. I don't want to even be talking about the dollar.
Yeah.
I don't like the dollar.
Yeah. No choice, though. It is what it is.
No choice. Okay, so I mean, with that being said, how are you feeling about silver then? Because if we're thinking 1550 for gold, I'm curious what you're looking at for silver.
Yeah, the weird thing about silver is that the chart is actually stronger than gold's, right? In that you had this big move up and then a lot of bullish consolidation here, but it just couldn't break out above this trend line. And now today you are seeing a big drop in it. But bottom line is gold's making new 52-week lows and silver is not. So again, I still think that if gold continues down and the metals do and the dollar strengthens, you're going to see silver head down too. But this is a little bit more intriguing to me because of its relative strength in a very, very strong dollar environment. So it's I really don't know what to make of it, because with a global recession on the horizon, that's bad for the industrial side. With the strong dollar, that's bad for the safety trade side of silver. Yet silver has somehow performed really, really well.
Well, I mean, a lot of people are promoting silver. I mean, so many people say that silver is the investment of the lifetime because of the upside that we have, because of how much I feel like it's been held down compared to, especially gold, when it comes to that element.
Yep. I think you're 100% right on that.
Well, was there any other chart information? Because I do want to be respectful of your time. I know you got a lot going on. Was there any other charts that you wanted to cover?
At this point, it's just not pretty out there, frankly.
Right.
I think at some point we're going to get bounces. So for instance, I am nibbling a little bit on various tech names. I think like, a Meta. Take a look at this Meta chart here.
Well, real quick, while you're doing that, I'm looking behind you. Your screens have nothing on it. That's a sign of how bad today is.
That's right. My computer just I think when I started the interview, they were lit up and they just like, nope, we're done. We're done.
Yeah, we can't even show this. No.
But you could see here on Meta, like as a technician, this is a really, really interesting level down here. So anywhere between 140 and 135, I would say. So like little things like that, you start to notice the massive drop, especially short term. Meta went in just like 10 days. Meta's gone from 170 now to sub 140. So like things like that get my attention, but just as a swing trade, like I would never encourage anyone to, buy here and say, I'm going to hold for the next year or two. I think that this is a shorter term market. It's a bear market, which means you have to sell the rips. And if you get one, you don't kind of say, oh, I'm going to hold it forever. You say, all right, let me take that money and then I'll rebuy it lower in 6 months or 3 months or 2 months or something like that. So bottom line is there are charts that are looking interesting, but just be really careful out there, everybody.
Yeah, definitely be careful. And real quick, one last thing I'd like to ask you. And like the thing like you were showing with Meta, that's something that you would cover within the money stocks?
Yeah, correct.
Okay. Versus what we were talking about with the crypto, that would be covered on verified investing crypto.
Yes.
The last thing I want to ask you is, and it's a super chat from Bojan, I can't pronounce his last name, Probulovic. Do you expect a bounce in the NASDAQ, Dow, S&P of the June lows? And if so, to what upside?
Yeah, so I do think that, at this point we've got a 3-bar surge on this is the QQQ chart, the NASDAQ 100. So you have a 1, 2, 3 bar down. You're coming into that level. I think you do get a bounce, but my guess is your upside's limited to probably 283 on the Qs. So you're looking at only maybe a 10-point bounce. That probably would equate to about 100 points on the NASDAQ, maybe 150 or so. But yeah, I mean, for the most part, I think that, yes, you're going to get a bounce, but just don't stay around too long.
There was one more thing, and I'm sorry. I meant to ask you about this with crypto, and it just completely slipped my mind. But XRP has been obviously performing pretty well, and there's a lot of speculation about the case. Yeah. I feel like we're going to get a verdict on the library case, which is getting less attention than the XRP case, because the library case will help to set more precedents as well. But and I don't know if this is all just anticipation of possibly the ending of this trial, this lawsuit with the SEC, or if it was just actually time for a breakout.
Yeah, so one of the things we had this massive wedge pattern, and as the wedge pattern gets to a head, it forces price to either break out or break down. In this case, we broke out, and you would generally say that might be a positive, meaning that there's probably some insiders that are getting kind of inside info that maybe the judge decides in favor of Ripple in this situation. And that would be why all of a sudden more buyers overpowered the sellers and broke it to the upside. Having said that, is it a slam dunk to go long Ripple? No, I am not long Ripple. I just don't play those kind of gambling type things. But I will say this, is that anything that occurs that is positive for Ripple in terms of the judge's decision is a very positive thing for all of crypto. So I think that's why I'm rooting for it. Like, I'm rooting for Ripple in this scenario because it's just good for all of cryptocurrency. And you could argue that that's one of the reasons why the NASDAQ and the S&P have broken down, but maybe crypto, which hasn't broken down, is holding up because of this potential positive news.
Which would be the last bit of good news that we could get if it turns out to be good news. But what you're saying, though, is by looking at that chart, that upside action was not written in the charts. It was something completely unexpected.
Yeah, so in the chart, you knew at some point as this comes to a head, this little triangle here, you were going to break out one way or the other, but you really, with wedge patterns, you don't know which direction it's going to break out.
Okay. That's cool. All right, man. Well, I appreciate it. Thank you again. I'm sorry I kind of went out of order. Normally I try to keep things very consistent, but it's been a crazy week. I know it's been a crazy week for you. What I will do real quick, and I'm going to add to the stream, so I will share links. Again, this is all down below. The playlist with all of Gareth's previous appearances here on Rice TVX and also links for his Twitter account. And then In the Money Stocks, where you can get information regarding live trades for traditional stock markets, and then also verified investing crypto, dealing with crypto. And again, he does show the verified information, shows the profit, shows like when he entered, exit, all that good stuff. Very successful at what he does. I appreciate, just being able to have these conversations with you, man. You're one of the people I really, I mean, I enjoy talking with a lot of people, but I really enjoy our conversations.
Thank you so much, buddy. Yeah, I'm the same. I love our conversations.
Well, I do appreciate everybody for tuning in. Right now, we got 289 people. I didn't pay attention to see how many likes or dislikes we got. But if you have not taken time to smash that like button, make sure you do so. If you're not subscribed to Rice TVX, I would just ask, what are you waiting for? Again, the links will be down below for everything that we talked about on today's show. And I'm going to go ahead and leave you with this. For the weekend, one, enjoy the weekend. Be a blessing to others. It comes back around. Treat people how you want to be treated. Be the change you want to see in this world. Be the glitch you want to see in the matrix. Much love.